Hey everybody, welcome back to the channel. Welcome to all the new subscribers. I am so excited to talk about today's video, but before I do, I wanted to kind of update everybody that's been following the channel for the last couple of months. I'm kind of a smaller YouTube channel here on YouTube, and I share my journey to financial freedom, and really the topic that I discuss most is the concept of dividend growth investing, building cash flow or passive income. And I share my journey very openly here on YouTube. I share, exactly what I'm investing in, my method, my methodology, my thought process behind it. And, if this is something that you're interested in, I'd invite you to like the video, to subscribe, to, comment below, kind of share, your thoughts. But everything that I share here is really just, my experience, what I've learned over the years, and hopefully, the person or the people that I'm addressing here in this video are really your newer investors that are interested in the concept of investing in dividends. And in particular, in this video, I want to talk about real estate investing. No, I'm not talking about going and purchasing an actual property, a physical property, but actually investing into real estate through real estate investment trusts. Now, this video is not going to be an introduction to what is a real estate investment trust. If you're interested in that, I've shared a previous video on that I'll link in the top right, that you can go ahead and check out that if you're interested in that. But in this video, I really want to talk about my favorite 3 REIT ETFs, and really this is for all of those that are newer investors or beginning investors that are looking to invest into real estate, but maybe just don't have the know-how, the network, or the capital to go out and purchase an actual physical property. So this is what we're going to be talking about, and also throughout the video I'm going to kind of share my thoughts and my thought process behind why I've chosen to do certain things. So if this is of interest to you, stick around and we'll go ahead and we'll break it down, and we'll take a look at my 3 favorite stocks. I'm actually going to add in a 4th one, an individual, not stock, REIT ETF. I'm going to actually add in a 4th one, an international one. So really quick, if you're, just to catch everybody up, so a REIT, it's a real estate investment trust. An ETF is an exchange traded fund. It's pretty much a collective group of stocks or REITs in this case, in an index fund or an ETF. And that's what I'm going to be talking about today. And I know, just in full disclosure, if you're a little bit more of an experienced investor and you say, okay, well, there's different tax implications that come with investing into real estate investment trusts. I'm fully aware. I'm not going to dive into the tax aspect of a real estate investment trust. If you're interested in that, you can go check out another video that I shared on the implications of taxes and investing in particular on your dividends. But today I want to share, my favorite REIT ETFs. And I've done a lot of research, and all of the ones that I'm going to be sharing with you today, I actually personally own in my own portfolio. So if you want to look, you want to check this out and you want to do your own research on REITs, you can actually head over to REIT.com. It's a great asset if you want to check out information on an individual REIT. I'm not affiliated with them. I just personally use their services. It's great. Definitely recommend it. But first off, I want to head over to ETF.com, and I want to take a look at the first REIT ETF. And that's going to be VNQ from Vanguard. VNQ is probably my favorite REIT ETF. And what I want to do is, when I'm comparing and breaking these 3 or 4 actually REIT ETFs down, I want to take a look at a few things. I want to look at, okay, when were they created? When was their inception date? And so what I'm going to do is I'm going to stack rank them at the end and see, okay, well, what would be the best or the most optimal ETF to invest in given your circumstance and your risk tolerance and what you're interested in. And I'll do a stack rank at the very end of the video here. But for this, so what I'm looking at is I'm looking at the inception date. I'm looking at the expense ratio, so how much it's going to actually cost. I'm going to look at the assets under management. How many assets are these, currently being managed by these ETFs? I'm also going to be looking at the number of holdings. Now, one thing that I think is important to mention, real estate investment trusts, heading back over here to REIT.com, there's actually just around 200. So we're not talking about thousands and thousands of REITs. We're talking just about 200. So that's very important to remember and to understand, right? So then heading on down, another thing that I'm going to be looking at when I'm assessing these REITs is the different sectors that they're invested in. Because when you're investing in the REITs, that's the wonderful thing that I love about REITs is not only are they extremely liquid, you can get in and out of them quickly, and with that could also present issues of volatility in a down market, but I won't get into that today. I personally really like REITs because of the liquidity. I can get in and out of them. But there are also things to consider when investing into those and what that can mean. But we're looking at the REIT sectors here, what kind of sectors they're involved with in these particular ETFs. And then lastly, what I'm looking at is what is the total overall weighting? Of the top 10 companies in these REITs, how are they skewed? How are they heavily weighted? Right? And that's what we're going to look at, and that's what I'm going to break it down. So with Vanguard, for example, Vanguard is a little bit unique. The highest weighted holding is actually another REIT ETF through Vanguard. So it adds a little bit more, diversification. But with each of these individual REITs, they offer something different. Now, it's important to understand, once again, there's just around 200 REITs, so there's going to be some overlap. Now, I've shared comments on Reddit before in the past on, my favorite REIT ETFs and my portfolio, and some of the feedback has been, well, yeah, there's overlap. And there's always going to be overlap when you're, in a lot of cases, when you're investing into ETFs. If you were to invest into VOO, the Vanguard S&P 500, or the VTI, the Vanguard Total Market, you're going to have some overlap, right? And especially when there's only just around 200 REITs, there's going to be overlap in these ETFs, and that's why you don't necessarily have to purchase into all of them, although I am invested in all 4 of them, actually, that I'm going to go over. You don't have to invest in all 4 to get exposure, right? And you're going to have a little bit of overlap. So that's the first one. This is absolutely my favorite. In terms of full disclosure, I own VNQ in my M1 Finance account. I own it in my HSA, my health savings account, and I also own it in my Roth IRA. I like to take advantage of also the tax advantaged or tax deferred, aspect of investing into these type of vehicles in a tax sheltered account, right? And so in my portfolio here, I know I'm kind of jumping back and forth here, but going over into my real estate account. So in my M1 Finance account, I have my main account, my passive income account, where I just have U.S. equities and a few ETFs, US ETFs, and I have my real estate account. This is what I love about M1 Finance is you can actually have, I think, up to 10 sub-accounts. And the passive income account is where I spend the majority of my time. This is where, on the YouTube channel here, where I share really all of my, my holdings, what I go through with all of you in each of my videos, and kind of share my insights of why I'm investing in individual companies and the strategies that I've taken. But this other account, this real estate account, has been kind of more of a project, an experiment. And what I've done is I've really put it on autopilot. I've invested $10 every single day into the account, and I have the auto invest feature set on from M1 Finance. So every single day, it'll automatically invest into my underweight holdings. All right, but I don't want to get into a tangent here. I've actually shared this in a previous video. So if you're interested in that, you can go and check that other video out that I shared on real estate investing. So moving on to the second REIT ETF that I want to go over today is the Schwab SCHH. Now, this ETF, I do like it. One of the things that I really like about it is the expense ratio. The expense ratio is extremely low. The one thing that is a little bit, concerning to me is it hasn't been around for too long. It's only been around since 2011. It doesn't have very many assets under management. It also doesn't have a high number of holdings. So there's not as much diversification in this account. And so that's something that I'm aware of. And another thing here is, you look at the top sectors. It's fairly similar with VNQ to a certain degree with commercial, specialized, and residential. It does have the most exposure to residential out of all the others that I'm going to be sharing today. And residential is one of the more risky sectors within real estate. It got beaten up pretty bad during the housing crisis in 08 and 09. And so something to be aware of. And also another thing that's really interesting is the total top 10 weighted holdings in this REIT. There's 45%, so there's not a lot of diversification. And you can see here a lot of the holdings here that are in this fund are I actually hold individually in my M1 finance account. So if you look at Simon Properties, for example, or Public Storage, you'll find those in my portfolio as well. And I've broken my portfolio down by sector. So you got healthcare, data centers, retail, a slice for ETFs, diversified sector, industrial, self-storage. For example, the self-storage here we got PSA with Public Storage. With real estate, we have Simon Properties. It's been beaten up pretty bad. I'm actually a fan of Simon Property. I think it's, especially where I'm at down here in Texas, in Austin, there's a lot of major, I guess you could say, commercial real estate or retail real estate, I guess you could say, where you can go shopping. You could have, it's just these huge complexes, and they're really nice. They're really well kept. And I go by there, and there's never a time of day that the parking lot is just entirely packed. And that's why I think, yes, Amazon has taken over the world, but I think there's still a lot of room for companies or for brick and mortar retail stores, and that's why I'm invested into those, among other reasons. So that's the Schwab ETF, REIT ETF here. Moving on to the next one is going to be your USRT from iShares. And USRT, I really like it as well. It's been around a little bit longer. It's been since the financial crisis. It has also a low expense ratio. Just in general, this is low. It's lower than the Vanguard ETF here. The one thing, though, is it does have only a small amount of assets under management. And the number of holdings, it actually has a good, healthy number of holdings in the ETF. Okay, and another thing it's important here is it tracks it by market cap. So when when this fund or this ETF is looking to incorporate REITs into their fund, this is how they're doing it. Okay, and if you want to dive into this a little bit deeper, you can head on over to ETF.com and you can type in the ticker symbol VNQ, SCHH, or USRT, and you can check those out. When it comes to this sector, they're not. This one from iShares is not so diversified. Is really heavily weighted in commercial and specialized, not so much in the other sectors. So it is what it is. Also, with the total top 10 weighting, there's only 36% in the top 10. So that's a little bit better than, for example, the Schwab ETF, and even, if I'm not mistaken, the Vanguard as well, just a little bit. So looking at here at the USRT, and one thing that you'll notice, a lot of these, they're invested for the most part in a lot of the same companies. And that's what I mentioned with, you're going to have some overlap. You absolutely will have overlap. And that could be the argument that you could say, okay, well, I only need one REIT ETF to get a good amount of exposure to real estate or real estate investment trust. And I would say absolutely, especially if you're a new investor and you want to make it incredibly passive. You don't want to take a lot of effort into researching the companies, whether upfront and ongoing, right? When you're first initially selecting the companies and then, following up on the companies, making sure that they're still a good investment. If you want to make this incredibly passive, you can simply create one slice and fill it with ETFs. And you couldn't go wrong. Absolutely not. I personally, I like to invest into both individual companies and into ETFs. It's just kind of how I am. I enjoy it. It's kind of a hobby of mine, and so that's why I do it. If I just kind of taking the perspective of maybe somebody that's in their early 20s, they're going through college, or they don't have the time, I think, just from my personal opinion, not professional opinion, personal opinion, just sticking with a high quality ETF is going to serve you very well. All right, and so that's how I've done it, and I'm not going to break down the Vanguard international ETF. That's the one that I was talking about. But I do want to share and kind of benchmark the 4 ETFs here. Now, the first one that we took a look at was the Vanguard VNQ. Inception date of 2004, so it's been around the longest. The 3-year annual growth rate is just over 4%. Over 5 years, it's just under 5%. So decent, not in crazy high, but decent. I guess this is questionable, right? So the actual price of the ETF has gone up incredibly, but the actual dividend increase. Now this is the dividend growth. I forgot to mention that. This is the dividend growth, not the actual performance of the individual ETF. Okay, the expense ratio, has a little bit of a higher expense ratio, but it has a higher starting yield. So when I look at VNQ and I look at how quickly they're growing their dividend, this is more of an income-oriented ETF. This is not, I mean, it is a dividend growth ETF because they're growing it, but nowhere near the rate of for example, a Schwab or a USRT, but you also want to consider you're also getting a higher starting yield. So this is why when new investors are looking at, okay, well, how should I invest? What is dividend growth investing? How does that apply to me? Now, it really comes down to who you are. Now, if you're just out of college, you're in your mid-20s or early 30s, you have time to afford a lower starting yield and allow the power of compounding to then grow the dividend much quicker, so that once you do reach the time of early retirement or retirement, you then are having a much higher yield, a yield on cost. Okay, now that's very important. Now, say for example, another scenario, you're just nearing retirement. You don't want to take the SCHH, for example, because it has a much lower starting yield. You need the income now. And so that's why I would say, okay, well, the VNQ is going to be a clear front runner for you. So you really want to self-assess and see, okay, where am I at in my life? When do I anticipate needing money? Or, for example, what we talk about on this channel is living off of passive income or dividends for cash flow. And so understanding, okay, well, when am I going to need to tap into those dividends to then start paying my living expenses? And if you have years and years to go before you're going to need to tap into that cash, you're going to want to look for an ETF or a vehicle that is, when looking at this from a dividend growth perspective, one that is growing their dividend a little bit more exponentially, right? And that's why when I look at these two, when I compare VNQ and USRT, right, in my particular situation when I'm in my 30s, this is a lot more attractive for me. Okay, now for my parents, for example, this is going to be a lot more attractive for them because it has a higher starting yield, it's a little bit more established, etc. Okay, now moving on. Now, looking at the yields, obviously the front runner would be VNQI, the international fund, or the VNQ here, the domestic U.S. REIT ETF. Assets under management, VNQ, definitely the front runner there. The SCHH, a little bit lower, and the USRT with the lowest assets under management. Number of holdings. Now, this is really important depending on how much diversification you want. Now, if you were to say, hey, Jake, I just want one REIT ETF, and that's all I want, this is something that you could maybe factor into your decision. Okay, well, how much diversification do I want? Do I preference quality over quantity? What is my strategy? And what is my risk tolerance? And then you can kind of do a self-assessment and decide that way. Another way that I've looked at it was the sector weighting. The VNQ has the lowest diversification when it comes to the individual sectors that the ETF or the fund is investing in, whereas the others I rank, this is my ranking, as an average diversification. Nothing too crazy. The top 10 weightings, this also comes back to what I was mentioning earlier, right? If, depending on what you're looking for, are you looking for a one-stop shop and you just want one REIT ETF? Maybe you want something that's a little bit more diversified, right? With USRT, for example. Or let's say, for example, well, I want to be very diversified. Then you could say, okay, I want to go with the VNQI, which has a lot of holdings. This is international. And I could also get into the VNQ. Now, one thing, I'll throw this tidbit out there. VNQI is a great international REIT ETF compared to its mutual fund counterpart. If you were to go with VNQI in the mutual fund, as a mutual fund, you would pay an entry fee and a selling fee, a redemption fee. So it's a lot more cost efficient to purchase the ETF version of VNQI. So a little bit of a tidbit there. I almost got caught myself when I was looking to purchase it a few months back in my Vanguard account, and something to be very, very aware of. And the last thing here is the average holding. So what I did is I took all of the 186 and I averaged them out by their weighting, and I can show you exactly what I mean by that. And so what I did is I took every single one of these, the 100 plus from Vanguard, and I averaged them out, and the average holding weighting was just over 0.5%. So that's how I did that. And so once again, this is looking at it from a diversification standpoint. Well, how well diversified do I want to be, right? So the SCHH is the least diversified when it comes to that. But then also, you don't want to just look at it that way and shadow out everything else, because also it's a quality aspect. Especially in REITs, the quality over quantity piece really comes into play, because there's a lot of great REITs, and there's a lot of REITs that are, I personally would not own because of the risk associated to it. And that goes into, with the broader stock market as well, or your bonds, with every asset class, actually. But really the purpose of this video was to kind of break it down for you and see, okay, well, what is important to me? And for me, in my 30s, what's important to me is going to be different for somebody that's in their 50s or 60s, or maybe somebody in their early 20s. And for me, what's important, I have time for my portfolio to grow and to compound, and I'm not looking to start tapping into my dividends and pay for my living expenses tomorrow. So I have time for them to grow. So for me personally, when I compare all of these, this is really what stands out for me in my particular situation. I really like the iShares REIT ETF for a lot of reasons. You get a good amount of diversification with the number of holdings. It has a fairly high starting yield, it has a low expense ratio, and it has an extremely high dividend growth rate. And this is what I talk about on the channel, is this right here. The rate at which the ETF, or the companies within the ETF, are growing their dividend. And if these companies are growing their dividend, it means their business, they're expanding, they're growing, the companies are flourishing, they're doing extremely well, and that's what attracts me as a dividend growth investor. So once you've decided, okay, well, what do I want to do? Then you can go ahead and you can invest them in what fashion fits you. You can invest in a Robinhood or Schwab or Fidelity, whatever brokerage account you want. I've chosen M1 Finance because M1 Finance it makes investing, the experience, just so much more enjoyable, right? I set up my account, I did my research, and I continue to do my research to make sure, I follow these companies that I'm invested in. I don't listen into all of their earning calls and all that good stuff. It's very low maintenance for me. And I let it ride. I mean, I set up the transfers, the daily transfers. So from my bank account, it transfers over $10. And what I did is I set and it auto invests the money every single day, and I have my target allocation set up. And what M1 Finance does is it automatically invests into the holdings that, or to the target holdings that I have here on the account. So fairly straightforward. In the activity tab here, you can take a look and you can see, okay, well, what kind of dividends have I been paid? Now, once again, this is a small portfolio. There's not even $2,000 in here. And so I've just started this a couple of months ago, and I've continually, every single day, I put in $10, and just let it ride. And I've let this M1 Finance take it over, and I've been very pleased with that. And you can see here, all the activity. And this is so cool, guys. This thing, I don't see this very often. I'm a small YouTuber. This is the referral bonus. So what this is when somebody uses the link in the description below and signs up with M1 Finance and funds their account for $100, they get $10 and I get $10. And there's other YouTubers out there that probably get hundreds of these a week. It is so cool, you know, as a small YouTuber like myself, to see this. It really makes my day, right? And I make these videos for free. Like I'm not monetized. I'm just a small channel. And so when I see this, I really appreciate it. It's one way, you know, to like the videos, to comment on the videos, but when I see this, it shows that, you know, that I helped somebody out, right? And I was able to share what's worked for me, and hopefully, you know, if somebody signed up, then they found the information valuable, and that really makes me feel good, right? So, but yeah, this is how I do it. This is how I set it up, and the ETFs that I shared today, once again, I'm invested in them as well, and I think there's many different ways. This is what I also love about investing, is there's so many different ways. There's so many different paths to success, and this has worked for me. And one thing that I do want to show, so I opened up this account in mid-June, and I've just done it continually every single week. The only things that I've done is I've changed the target allocation. I currently have 43 holdings in the account. 4 of them are REIT ETFs, all 4 of the ones that we talked today. And this is something that people don't always share on YouTube when they're down. I'm down on a few, right? And out of the 43, I'm down currently on 5 of them. For the rest of them, I'm up. I'm up dramatically on some of them. And I haven't done anything. It's not rocket science. I've set it up, and I've done it I've done it in a way where it can just be on autopilot. And that's how I've set it up. So everybody, that's everything that I wanted to talk about on this video. Once again, I truly appreciate all the support. I think the community here on YouTube is great. I appreciate all of you, and I will catch you all in the next video.